We come into Friday with the US dollar still very much in demand across the board and still doing a fabulous job against the euro and pound. There's no denying the level of extension on a short-term basis, with the daily charts warning of some form of a minor reversal ahead at a very minimum to allow for the stretch studies to unwind. But at the same time, it's important to recognize that short-term, another dollar run to fresh 2018 highs against the euro and pound should not be ruled out today. Indeed, we did see green on those Thursday euro dollar and cable candles, but that green is misleading as the price action was accompanied by offsetting inside day activity in which both major pairs were confined to trading within Wednesday's ranges. Now, there have been developments this week that would argue for renewed dollar weakness, and these include a more dovish-leaning Fed minutes that showed a willingness for the Fed to hold off on accelerating rate hikes because of rising inflation, less dovish comments out from various ECB and BOE officials, with the BOE not sounding like it was ready to dismiss the possibility for additional rate hikes in 2018. And finally, signs of the U.S. administration angling back to that protectionist soft dollar policy agenda. At the same time, risk sentiment has held up all right, but continues to show many cracks at the surface, and the idea that 2018 may be the year where stocks finally move away from a near decade of buy the dips for fresh record highs to sell on rallies for new lows could be an idea that is gaining traction as the reality of monetary policy normalizations work their way through the system. This means seeing outperformance in commodity currencies against the euro and pound like we've seen over the past week should not be something that we should see regularly going forward, with the more risk-sensitive Aussie, Kiwi, and CAD underperforming against the major currencies. Other risk-sensitive factors out there at the moment are those of the political and geopolitical nature, with Brexit uncertainty, Italian government policy, and U.S. dealings with Russia, North Korea, and Iran, Canada and Mexico as well, very much in the spotlight. As far as today's docket goes, key standouts come in the form of German IFO readings, a UK GDP print, US durable goods, and central bank panel discussion featuring Fed Powell and BOE Carney. We get other central bankers scattered throughout the day. Looking at the levels, euro dollar will need to get back above 118.30 to turn heads, while cable will be tasked with a slightly more challenging objective of pushing back above 135 to inspire a similar turning point reaction. But again, if you're expecting big dollar declines on Friday, you could be setting yourself up for disappointment. Let's see how it all plays out. That's all for now.